Let's get more on this now with Arthur Goldstuck in Johannesburg. He's an author and information and technology commentator. Good to have you back on the program, Arthur. Now, this was a historic IPO with SK Hynix jumping 13% on debut, but now we're seeing a major drop. Is this just standard profit taking, or are those massive gains? Is this a sign that the AI boom is running out of steam?
It's a classic example of investors taking profits after a significant rise from the listing. We must bear in mind that SK Hynix share value surged more than 600% over the past year. It was one of the world's best performing AI stocks. So the fact that it climbed even further after listing in the US was an indication of enthusiasm for the stock, but the sell-off is very much a case of profit-taking rather than any news that came out of SK Hynix itself. Their order book is still exceptionally strong. Demand from NVIDIA and other AI chip makers hasn't changed. So you can tell that the sell-off is about investor sentiment rather than any deterioration in prospects for SK Hynix.
Right, and SK Hynix controls 60% of the world's AI memory chips. Can any rival realistically steal their crown during this expected 12-month stock cooldown?
We are seeing a broader AI hardware ecosystem benefiting from the demand, and companies that compete with SK Hynix like Samsung Electronics, Micron, and the like are part of that same spending cycle. So it's not so much that they are competing, but they're all taking part in this surge in demand for AI-related memory, because memory, in effect, is one of the strongest parts of that whole supply chain for the AI infrastructure boom. And you see Samsung and Micron, in effect, racing with SK Hynix to supply that high bandwidth memory. But because there's a shortage of memory, it's not so much a race between those players, but rather a race to meet the demands of their customers.
And traders are also cautious about upcoming second quarter earnings. Have Wall Street's expectations for AI companies simply become impossible to meet?
They seem to keep meeting those expectations, but every time they meet those expectations, Wall Street seems disappointed. It's as if they want them to fail so that they can then buy more high value or bargain chips. Because the key question isn't whether AI is driving semiconductor demand, because it is. It's whether the likes of Microsoft, Amazon, Google, Meta can sustain those record levels of capital spending. And I think that's where the investors are becoming dubious. As long as they keep up that spending, the companies across the ecosystem will continue benefiting, but investors will be skittish, and they'll also be a lot more selective about which companies deserve those kind of, you might say, absurd valuations. Investors would say premium valuations.
Arthur Goldstuck, we'll have to leave it there for now. Thank you very much for joining us here on TRT World.
Thank you.